Alright, first of all, my mic was off. But I jump on, hoping, yo, let's go bang some alcohol, let's rape some fuckers up. And the server's off. The motherfucking server's off. So island 1, 2 are always active. But where the fuck is 3, bro? The one that's actually good is not here. And that's taking the piss. Now I have to go into the server, look at what's going on. Okay, let's do this shit. Okay, so they're saying the server is down. Bro, we just asked how long this shit is down for, bro. And apparently they have an island 4. Right. But island 4's not on this shit. Oh. I just fucking woke up, bro. I'm hella tired. And we're jumping an arc instead of fucking doing something good and creative with my life. But that's life, bro. That's motherfucking life, trying to make a living out of playing arc. But really ain't fucking going well for me. Wait, what's this? Arcadia. I don't want to play any of the server, man. Shit, man. What do I do, bro? What do I fucking do? I really don't want to play no other server apart from this one. Let me set my cam up properly. My cam is not up properly, is it? Actually, it is. So I'm looking at 2 screens. It's very weird. I'm either looking this side or this side. So if I'm looking here, these motherfuckers ain't even replying to tell me how long the server's gonna be down for, bro. The time I wanna play is fucking down. The fuck you want me to do now, bro? Let's check some other shit up. I'm not sure why that is. I'm not sure why that is. I'm not sure why that is. These motherfuckers at Restream.io are always changing my YouTube, what's it called, title and description, just fucking promoting themselves always 24/7, bro. Like, chill. Calm down, bro. Just fucking promoting themselves always 24/7, bro. Like, chill. Calm down, bro. Just fucking promoting themselves always 24/7, bro. Like, chill. Calm down, bro. Need to mute my YouTube. This shit's pissing me off, bro. Like, I am about to get vexed. I'm about to fucking break some shit. Like, the fucking time I want to play is not active. Ugh. I might just feel like fucking going to some bubble lobbies and fucking everyone up. Even in this motherfucking gear server, it's down. What the fuck is going on, bro? The game is unplayable because of these fucking shitty little servers being down 24/7. Like all these other servers, I've never seen Island 2 or Island 1 go down, bro. Never have I seen it go down. And there's other PvP servers where it's fucking like 14 times boosted and you just get raped. You go into a game, you have some motherfucker flying with the PT, picks you up and fucks you up as soon as you spawn in. Oh, this. You know what, bro? You know what we're gonna do? We're gonna do some trading. Until then, I'm gonna show you, man, how to do some trading. Let's get some. Oh, video game capture. Let's turn that off. Let's do Windows capture at. Here we go. I'm gonna show you, man, how to do some trading. Make some money while we sit at home while I lost all my fucking money. Okay, Friday the 23rd of October, and then Monday is today the 30th. Since then it's been going down, 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 down. Wait, what? This chart don't make sense, bro. So I lost about £200 on Friday because it dropped significantly up to here, and then I put £1 in. Fucking made £15 back. Dog shit trade, but you learn. You know what I mean? So today, it ended on Friday. I think it came down to this much. So then it started on Sunday last night, and Monday it started off high in the morning. Obviously, we're talking about very early in the morning. So the time you wake up is about 6 o'clock. It started out here 6, 7 o'clock, and it's gone all the way down. And it's meant to obviously boost up. I don't know, bro. I forgot what the website was called. Hold up, chat. Server is still down for me right now. So yeah, that shit is still down. Might as well do some financial courses, bro. Make some money, learn to trade, bro. Best way. And I mean, you guys can learn to trade here for the course I paid. Obviously, you guys ain't gotta do shit. So we did the introduction to the forex market.
Strategy is what we call, not just technically, which is a little earlier than the stock market.
This is the main important, anyways. You know what? Let me edit the stream info. I think we should do the same on YouTube as well. Let's edit the video, quick time. Right.
As the market's opening up, we have the close of the Australasian market, and we also have the close of the Asian market.
This is kind of the most important time zone. This is when
Throughout the day,
markets
as you can see, the US market enters around lunch.
Very volatile, like they're working a lot. So usually if it's not this time scale, markets are rarely moving, just like one pip at a time. But at this point, they're blowing up. They're like actually trading. So let's just imagine we are outside and why am I even talking to myself, bro? No one's fucking watching. But yeah. Let me learn until someone joins and I can teach you. I can explain what we're talking about.
And then again around lunchtime, Aussie, Canadian dollar, CAD, New Zealand dollar, Kiwi, and the Singapore dollar also.
So this education bit is probably the most important, I think, right here. These tradings, how people trade. Most of this shit I already know, like indicators, RSI, price action candles. Actually, not that much actually. Time frames, obviously. Moving averages, yes. Support and resistance is the most basic thing that you will learn into trading anyways. Like obviously let me show you the support and resistance in this graph right here. If you look at this red line, let's use this red line right here. This would be your support about here. Actually, wait 1 minute. So this would be your support right here. So as you can see, this is the first method where the market pushed back up when it was in a downtrend. So it went significantly down, then it goes up. Let's use this purple as example, and we'll use this as a support because if you remember, when the market's going up, this is when it probably goes up and down, and this is when it obviously blows up. It tries to break out, but the market kind of brings it back down, and it goes into a downtrend. So when it's going up here, you can see it's hit this point very high, and it's coming back down, and that's what you call a support resistance. But a support resistance is only created when this happens 2 to 3 times. So as you can see, it's going down again, and it goes up. As you can see, this blue line nearby anyways right here, that's the support, and it falls back down again. This time it breaks past our resistance, but not by much, because when you're having a resistance, it's not always just a little spot. You have like a little, quite a big of a margin for the resistance for it to shoot back up. So obviously this time it's come down a lot. But the thing is, we're talking about gold here. Gold is very volatile, so it's moving up a lot, up and down, up and down, up and down a lot. If you look at any other currencies, they are not moving like that. See how it's just nice and a smooth graph. If we talk about, and it's going in an uptrend. Let me show you again with the GBP. Actually, that's not an example because you do have a bit of volatile. Let's show you the European against the Japanese yen. Again, very smooth market. Obviously, you have 1 or 2 breakdowns. This is usually from the news. If there's a certain news about the currency, about to any kind of news, you know what I mean, that's going to affect the currency. That's when lots of people are like, okay, let me get the fuck out of this trade. But yeah, so support resistance is very important. Usually how you make money. So what I like to usually do is, see my yellow indicator here, I like to put it on the current market price. And the reason I like to do that is so I can just remind myself where the market was when it's kind of moved later on. So I can kind of plan ahead on how to, where to trade, where not to trade. Oh.
price expressions. Price expressions, different asset classes. For you guys watching this sitting our foundation course, we do recommend sticking to just trading Forex, but we will also touch on some indices too. The reason for this is you now know how liquid the FX market really is. For those guys that work closely with myself, the traders, or have been to one of our advanced programs, or going through some one-on-one mentoring, then of course we will diverse between different asset classes, including commodities, stocks and shares, and so on. As it stands for you guys, we'll stick to FX and slowly introduce some indices. So when counting pips or points, we focus on the highlighted digit in each asset class. Currency pairs, pips, as you can see, 1.45150 is the example here. This is pound pre-Brexit, pre the vote. And the highlighted digit is 5, which is the 4th decimal point. The 5th decimal point, which is the 0 on the end, is what we call a pipette, which we actually want you to ignore. So we will be working to the 4th decimal point. This is how we measure our profit. As an example, if we are buying a currency, let's say this is Great British Pound against the dollar, and the price is 1.4515, and the market goes up to 1.4520, the market has gained 5 pips, meaning if we are trading at £1 per pip, we bank £5 profit. If we are trading at £10 per pip, we bank £50 profit, and so on. Now that is the same with currency pairs, that include the JPY, the Japanese yen, but we only work to 2 decimal points. So the price here is 115.25. And again, the last digit, what we call a pipette, we will ignore. So if we are now selling this currency pair at 115.25 and the market goes down to 115.20, the markets move 5 pips again, so we bank 5 pips. I'm sure you guys can work the rest out. Stocks and shares, which as I said, we won't touch on too much over this course, but for those guys that do want to excel and introduce different asset classes, there are opportunities above and after this course. So for example here, 3520.00, this would be 352 pence per share, per stock. Commodities, again, we won't be touching too much, although we do look into gold, silver, metals, platinum, palladium for our advanced team. And oils is something we do take into consideration also. Indices, so the FTSE 100 or the Dow Jones, the US 30, which is a collective.
Currently at 2000.
We work before the point. As you can see, 6758 is the example. If price went down and we were selling to 6750, we bank 8 points. Now, I also use points and pips for a lot of my examples. They simply mean the same thing to myself. So if I say pips or points and we're still talking about currency pairs, it does mean the same thing. Price expressions. So you will commonly hear us talking trading lingo. One being, if we are buying, we are taking the market long. So when price moves up, we look for buy positions. When we're selling, we look for short positions. So when price moves down, we look for sell opportunities.
So again, I'll repeat that step.
Price expressions. So you will commonly hear us
long.
So when price moves down, we look
short.
for sell opportunities. price expressions spread. The spread is the difference between the bid and the ask price. Different brokers will charge different commissions when placing a trade.
I can show this guy.
One way to remember what the bid and ask stands for, myself, bid to get rid. Now, if you're getting rid of something, you're throwing it away, you're selling it, you're not using it. So Euro USD is priced at 1.3784 as a bid price. The ask price, the buy price, is priced at 1.3786. The difference between the two is 2 pips. Meaning when you place a trade...
So I'm trying to do this on MT4 right now. I don't know if you guys can clear into it. You can see that the red is the sell, which is the bid, and then the ask is the buy. And that's the two price differentiating between each other. And the spread is, the market's moving very volatile. Very, it's going crazy right now. So probably the best time to trade gold right now, if you know what direction the price is going to go into. As I said, we've already highlighted it here in the yellow, so we will know where it goes. Arc server is still not up. But yeah.
Trade, you will automatically go negative 2 pips. Which is why when, especially some of you new guys, place a trade, you're worried that it's automatically gone red. Well, that is just a broker taking their commission. As an example here, GBP JPY, 172.50 to 172.53, the spread is 3 pips. So when you place a trade, you will automatically go negative 3 pips. Now, the brokers that we recommend will be professional brokers. So you should see spread be no more than 8 across most major pairs. When you start to look into more exotic pairs, as an example, the Polish zloty, the Turkish lira, of course, the value between the two currencies is going to be greater. Therefore, the spread will increase, and it's going to cost you more to place a trade. Please remember, if you're an intraday trader like myself, and you may have a 20 pip target, if your spread is also 20 pip, you now need to gain 20 pips to go to break even, meaning that you actually have a 40 pip target there. So always bear this in mind. Ideally, we don't want to trade a market with more than 8 pips. So to recap, when we're buying, we take the market long. When we're selling, we take the market short. The bid price is the sell price, and the ask price is the buy price. The spread is the broker's commission that's charged when entering a trade.
So I can show you guys one of the trades that
I'm just
lost,
going to...
and the one as well. One MT4, the latest one which I won, was very good. Just on Friday, I think it was. We went from, wow, we did more than enough pips actually on that one. It's 78, 80, 81, 82, 83, 84. 7 pips, or is that 70? Sorry, yeah, 7 pips. That's a lot, bro. If you're looking in terms of gold, I traded on 1p per pip and I made £5. So that has to be 70 pips. It's a bit confusing with gold especially. But when I lost money, I was trading at 0.06. And instead of £5, it was £25. So you can see the difference right
To
there.
take you over to one of our trading platforms just to show you how this looks and what it is on the chart. This is a trading platform called MetaTrader 4, which most brokers use.
That's the one.
There is a video in the members section of our website where you can watch to find out how to template MT4 and how to work your way around it. When you click on a currency pair, in the top left corner, as you can see here, it will show what currency pair you're trading on what time frame. The two boxes below, as you can see, one says sell at 1.2568. That is the bid price. The ask price is 1.2571. Now the difference between the two, which you can see there, is simply 3 pips. Now if I was to place a trade and go direct to market here, it's going to put me in at -3. So that is what that means when you identify this on your MT4 platform, and that is the broker taking their commission. It is a commercial world and there are different types of brokers out there. The brokers that we work with, we don't mind the broker taking some spread, as that is how they make their money. So it's in the broker's best interest that we are winning trades, as we will continue to place trades at a higher value, meaning the broker makes more. So we're all on the same team here and we have a fair level playing field. Here on the right hand side of the screen, along the bottom, you can see the date of the bars. So if you're back testing, you're analyzing, you can look for patterns that happened on days previously that we're now looking to repeat in the present. Along the right hand side, you can see the price of the currency. Again, work to the 4th decimal point. The price is currently 1.2571. Again, if we was buying here and we took the market long,
so that's kind of just
and it went to 1 point,
pretty much, I think, which everyone can just kind of gather in one day. But look, this is the main key point I wanted to make here of why we put the line there, the yellow line there. So, oh, for fuck's sake. So this was the main reason. This is where we started off, right? Just about 5 minutes ago, and that was at 2000, and now it's currently at 1996. So that is 4 pips gone down. Probably going to 5 now. I think that's more than 4 pips, bro. I still need to figure out how these pips are working. Usually you can use it by this pip calculator right here. Yeah, and minus 4 pips. Or minus 40, actually. I think it's 40, it's not 4 pips. 4 pips is very small. If we go on GBP 80, right? 272. Let's say we go from 275. 6. One, two, three, four. I'm confused as well, bro. I'm definitely gonna need to re-show this how the pips are calculated on this. But let me tell you if it's a good time to place a trade right now on gold. So it's gone down a lot, and so the last buy was 1998. So that was the buy there. That's not when you want to buy. So let's look at the graph. So it blew up. It's gonna come down, bro. let's say resistant bands up again. We will always do the resistant with purple actually. So the current resistance should be this. This should be the resistance 1, kind of 2, but like 2, 3. So it should come down all the way up to here, or let's say even here, you know, let's say if it's a very high resistance where it's falling down from below, and it should blow up from this point. So that should be the current resistance, or the new resistance, sorry, because it was the old support and it's broken through. So there's two options that can happen. Either it can come and it can break down again and keep going down to the old resistance, or we're gonna see a new resistance form up here. So it's gonna go up here and it's gonna go straight into an uptrend, which it's been doing for a while. It's been going into an uptrend. So yeah. So the thing is, it's about patience right now. I've learned this the hard way by fucking losing 220 pounds, or like 250 pounds or some shit, where I lost down here because I wasn't thinking enough, patient enough. So if I had that money in my account right now, I would have entered the fucking trade right. I was like, oh, it's gone down, it's gonna blow up, it's gonna blow up. But no, patience, and look how far it's come down already. Right now, I'm tempted to fucking buy in right now, but all I want to do is see how it reacts to this support or resistance, which is going to be the new one. So look, it could have already acted, like this could have already been the new resistance, and it's probably going back up for that reason. But all I'm gonna say is worth the wait to see what's gonna happen, and then take the next step. Always want to set your resistance a little bit low and see how it goes. So this could be the new resistance, and it might have already hit. See how it hits there if it acted from here, but I doubt that. So look, 1, 2, this is the third point probably for it to go up, but guess we'll never know. We're gonna have to wait out a couple of minutes, maybe about an hour. An hour's time is probably a good indicator, because we will have a new trend anyways, a new candle form, to see how it's reacting. But yeah, so just wait it out an hour, no point. I would rather save my money, I wish someone told me this, than act like a foolish and just gamble 50-50. Okay, it's gonna blow up, it goes, but then it starts coming down and it's all the way gonna go back to its previous resistance. So yeah, you're better off waiting right now. That's where we previously thingied, and this is obviously always use the blue as my TP1. So let's say if this was the resistance, my TP1 would be here. Sorry, probably about here, where I entered, where I was thinking to enter anyways. TP2 would be about here. That's it, I wouldn't go any more than that. Take the TP1 or 2 out. But let's say if this was a previous resistance, then what I would do is if it comes down here, it still breaks through, and the next hour is up to here, I would probably enter, because it would be going down to the previous resistance, and wait for it. I highly doubt it's gonna come up to here and go back up. I highly doubt that. So you've got one here as well, actually, sorry. This could act as a resistance, but yeah. So as I said, this was the previous resistance, very good around here. So let's see how it goes, how it reacts. Right, so we are on candlesticks, learning what candlesticks are.
Price expressions, price action, candlesticks. Price expressions, price action bars. Price action bars show the movement of price over a specific period of time. As you can see here, we have OHLC bars, which are open, high, low, close bars, and candlesticks. Candlesticks, I would say, is the more modern choice of bar. It's what we trade. It's what we will be teaching you how to trade and how to identify which each candlestick represents. So we will be using candlesticks moving forward. The difference between the two, if we take this big green bar here, for example, you can see the market opened, tested high, there's the low, and the close is here. So we have the open, high, low, close. The difference between a bar and a candle is simply with a candle, the body is filled. So the open, close is filled. So if we're looking from left to right, this is still the open and this is still the close. If we now take a look at a candlestick, we can still identify that this is the open and this is the close of the bar. Working from left to right. Now, the reason this bar here is a red bar, which indicates a seller's bar, is simply because the close of the bar is below the open of the bar. The previous bar that we looked at, we could see the difference between a bar and a candle is simply with a candle, the body is filled. So the open, close is filled. So if we're looking from left to right, this is still the open and this is still the close. If we now take a look at a candlestick, we can still identify that this is the open and this is the close of the bar. Working from left to right. Now, the reason this bar here is a red bar, which indicates a seller's bar, is simply because the close of the bar is below the open of the bar. The previous bar that we looked at, we could see the open and close. So the close is above the open, indicating this is a buyer's bar. Some traders use OHLC bars. We use candlesticks as discussed. You can change the color to your preference. Now, we have some traders that perhaps don't like seeing red as it can indicate a negative position or a negative color. So they may change it to perhaps a white or a blue. The industry standard colors, of course, are green for a buyer's bar, a bull bar, and red for a bearish bar, a bear bar, a seller's bar. As briefly mentioned a couple of moments ago, we indicate a buyer's bar throughout this course. Type of bars we need to identify that can support our trading decision when getting into the second desk. We'll show you an example on an MT4 platform that you will all be using. Down the right hand side, we will see the price axis. Now remember guys, we work to the 4th decimal place, and any pairs that use the Japanese yen, we work to the 2nd decimal point. Along the bottom, you will see a time axis. Here you can see the date of the individual bar that you're perhaps highlighting. You can see the date of the bar when you're back testing through previous years, or you can see the day that we are on today. Price expressions, time frames. The time frame defines when the candlestick opens and closes. We use 3 time frames for our strategies, which is the daily, the 4-hour, and the 1 hour. If we're looking on a daily chart, this simply indicates that 1 bar indicates 1 full day. Again, if it's a 4-hour chart, 1 bar will be 4 hours, and an hourly chart, 1 bar will be just simply an hour's worth of movement. The daily chart provides big picture context. It shows long-term trends. So using a daily time frame, we can take a step back and analyze what is going on in this market. Are we in a trend? How long have we been in a trend? Are we at the beginning of a trend, which means we have more room to make money on the smaller time frames? Are we at the end of a trend where there's low probability of us making money trading in that direction? So it's very important that we use the daily chart as a key chart. Me personally, at the weekend, I create a watch list along with all of the guys in the VIP group where we take a look and say, right, what pairs on a daily chart are on my hot list for the week ahead? What pairs are trending? If any pairs are going sideways ranging, they are not on our hot list. If any, as a recap, guys, now, the 4-hour opening times may vary. The easiest way, if you're based in GMT times here in the UK, it starts at, or the new 4-hourly bar opens at 2 a.m., 6 a.m. and 10 a.m. Then again at 2 p.m., 6 p.m. and 10 p.m. In one full day, you will see 6 4-hour bars. Now, a lot of the yen pairs, for example, when we go through a bit of analysis later on, won't give us a significant pullback. A pullback is simply allowing the market to breathe in its pull phase, allowing us to buy at a better price or simply sell at a higher price. Where the daily chart may not provide us with that pullback, we have 6 4-hourly bars inside one daily bar, meaning that the market cycles more frequently, provides more bars, which could lead to more opportunities. So time frame agreement is key here, because if your daily chart is trending, let's say for example your daily chart is just showing buyer's bar after buyer's bar after buyer's bar, that is great, and that's confidence that we're in a daily trend, meaning that when we use the smaller time frames, we can get in and get out throughout that day. So we have confidence that our bigger picture is showing us direction, and the smaller time frames, i.e. the 4-hour or the 1 hour, which as I say provides more bars, more opportunities. They provide more cycles.
So let's actually just check this right now, by the way. First of all, we check where our gold is at. It's back in the middle, stuck again, but that is going to be very volatile. So let's say this is the hourly time frame. Go to the 4-hour time frame. Hella volatile. Look at that. And then check the daily. I mean, you can check monthly as well, but look at the daily. Has been an uptrend usually. This was from October the 6th. So at the start of the month, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15, 16, 17. Past month, October, September, it was in a downtrend. Before that, it was in a downtrend. So it's been in a downtrend from May. That's when I was last trading actually. May till start of October, it was a downtrend, and it's gone significantly crazy. Amount of pips is, ignore the last one, 1800 pips. It's fucking crazy, bro. 1800 pips. If you were to do this in a whole month, that's just fucking crazy. Honestly, that is crazy. So this is from Friday till today, Monday. Obviously, it's only 17 because I just realized you have Saturday and Sunday, 2 days where the market is closed. So those 2 days are not going to obviously show up. But yeah. Going back into a 1 hour time frame. I hate when it does this. I don't know why it can never be done normally. Still stuck in the middle.
Which will give us opportunities to enter multiple times throughout the daily move. Price expressions, 1 hour chart. Intraday time frame It's used for trade entry. I personally trade the 1 hour more frequently, and one of the strategies that we're going to introduce to you at the end of this course is heavily impacted over the 1 hour time frame. I like to call it a smash and grab process because we're in and we're out on the now. So we need to understand what pairs are moving, what pairs are showing momentum, what pairs are giving us direction, which leads to an opportunity to trade. Of course, we have 24 1 hour bars over the space of the day. So just to recap, if my daily chart is showing me where it's going, I now have 24 1 hour bars to find a high probability setup. And that's exactly what we're going to show you over the duration of this course. Just to show you MT4, which is the trading platform you guys will be using. On the right hand side, we have the price as mentioned earlier. This is a chart of NZD JPY, so we will be working to 2 decimal points. As you can see here, the price is 72.11. If price went up now to 72.20, I now make 9 pips. At the bottom of the chart, you can see the date. Now this is a daily time frame. So we can see the date, just a small period that we're analyzing here is based over the middle of March to present.
These 3 lines
time.
are moving averages. Blue is the main one. That is every 20 bars
At the top
you
of
get
the chart now,
average.
you can see the different time
Red
frames.
is every 50, I think.
Now, as I said, we use the 1 hourly,
green is every
the 4
200.
hourly, and the daily more frequently.
Pretty sure.
Simply by clicking
100 maybe.
on one of the time frames will take you to the time
We're going to
frame
move on
we
to
have
that
clicked,
anyways.
which again, we can see more opportunities, more bars within that period. Just an example, guys, as we move forward, you will pick this up. Technical analysis. Technical analysis uses price movements on the chart to predict potential future price movements. We are predominantly technical-based traders, and we will be teaching you how to trade and read a chart successfully. Once you can understand price action, which perhaps is an art, and you know what to look for and where to look for it, you can trade any asset class. So for our advanced students, we have them looking into stocks, equities, other derivatives, and again, I mentioned earlier, some cryptocurrency, because you are trading what you see, not what you think. We do take some fundamental news announcements into consideration. Non-farm payroll, which was Friday just gone, which is also the first Friday of every month, is when the US release job figures. When we have high impact news announcements like Brexit or Parliament voting, it can send the market volatile. We see a real change in price, a shift in momentum. So we'd rather take a step back here and let the market do what it needs to do before we enter. We do not trade in and around high impact news announcements.
I mean, that's mainly if you've got money to waste, bro. You're basically gambling at that point because you don't know what's going to happen.
We analyze these price movements by
even if you have the news, oh yeah, it's going to go up. Everyone kind of maybe sells at the start, so it's going down. And if you placed a lot of money, you lost all that fucking money. You know what I mean? If you played really small, or if you just got in the right time and it's going your direction, bro, you made a lot of money. It's very volatile at that time.
Bars.
Which was same with gold on Friday, I think. Right here, it was very volatile, going up and down. And this is on the 1 hour time frame. But if I show you on the 4 hour time frame, you'll be able to see what I'm on about. Look at this right here. This was very volatile, going up, and so was this. All the way up, all the way down. These 2 days, it was very, very volatile. So I guess it looks like our thing did act as a resistance actually, because it's hit that point and it's gone all the way back up. So it's acts as resistance, but I still would not make a move right now. I would still hold it up, be consistent a little bit. Yeah, let's
Of
just wait
course, the
on gold.
current bar gives you an indication
I
of
am
how
gonna
it's
trade on gold
performing.
today. I've got
If you're
fucking
looking at a
£15 left
1 hour
in my
chart,
account after I
you
blew
can
it
get
up.
perhaps over the last 4 or
So
5
here's a
bars
challenge
how this
to
more
challenge basically to turn my I was left on £5 or £10 actually. £10, sorry. To go back to break even and actually recover all the losses I've made. But that's from £200 to £15, so I'm gonna be trading on 0.01 pip instead of 0.6, 0.4, which will obviously take a long time, long process.
morning's opened up, or how this afternoon is performing. If you're looking at a daily chart, you're looking at how has the previous week or previous month performed as individual daily bars. As I briefly mentioned earlier, we start from the daily chart and work our way down. So when we have confidence of what the bigger picture is doing and what the overall trend is up to, you have smaller timeframes to use to cherry pick your entries, as it provides
I'm
more
gonna start
bars
doing
and
this from now
cycles
on.
more frequently.
This is very good.
Now you'll notice a lot of terms that I perhaps use throughout this course. Here are some of the key ones in terms of analyzing and trading technically wise within your trend. So when we look for an uptrend, we're looking for the market to make a series of higher highs and higher lows. In a downtrend, we look for the market to make lower lows and lower highs. When the market is sideways or ranging, we really need to find some key levels of support and resistance to base our range on, which we'll cover again as we progress through this course. The market makes the same or similar lows and the same or similar highs, so it's a pretty flat range. Yes, there are opportunities to trade in a sideways market, but our high probability setups come when we can identify a clear trending market. When the market is too messy or there's noise, we simply just stay away from the market. There's a great saying that goes, we would rather be wishing we was in the market, sitting out, than being in the market, wishing you was out. And that's key here. And that's why we want to cherry pick and trade high probability setups and not risk our hard-earned capital by trading in a risky gambling way.
Did start on the gold
because that's not what we're here to do, guys.
As I did say, that was the previous resistance right there. So that did act as resistance when it went low. But oh well. So let's see what this new trend does. So you don't want to make too much of a rush into it anyway. Wait it out. See how the market's going to be moving in the next couple of hours. So you can find out what the next trend's going to be anyways. If it's going to go down or up. Well, currently it is in a very uptrend, the market, since the start of October. So let's see how it goes.
So again, in an uptrend, which is also called taking the market long, we look for a series of higher highs and higher lows. In a downtrend, we look for a series of lower lows, again in a trade high probability setups, and not risk our hard-earned capital by trading in a risky gambling way, because that's not what we're here to do, guys. So again, in an uptrend, which is also called taking the market long, we look for a series of higher highs and higher lows. As mentioned, we look for a series of lower lows and lower highs. When we identify a trending market, as mentioned, we look for a pattern of higher highs and higher lows. Now, the market will never go in a straight line. We go through two phases, as mentioned, a phase 1 and 2, which is a push and a pull phase. So
Alright, 1 second. Some scheduled in from the 5th of November.
phase 1, the push phase, is always with the trend. And as we can see here from bottom left to top right, we are in a uptrend, which, as I say, doesn't mean the market's going to go in a vertical straight line. The market breathes. So we have phase 1, phase 2. So this is push up, pull down, push up, pull down, push up, pull down. And we can identify
right there.
There's some clear turning points in this market here. And these are the turning points that we want to identify and that we want to trade. How do we know when the best time to place them is? Well, that will come down to our strategy, which we'll cover as we go through this course. Now, these blue circled areas are the key turning points, where it turns from going up to down, up to down. We can identify this is an uptrend. So we only want to trade the phases going up. So we want to trade this area in here. We want to trade this area in here and this area in here. Now the blue points are forming higher highs, meaning that each high point is higher than the previous. And the lows are forming higher lows. So we start here, higher high because it's higher than this one, and a higher low. As we continue trading this higher high, higher low, higher high, higher low, high, low, higher high, higher low, we can confirm this is in a uptrend. So all we need to do is find out how we can buy here, buy here, buy here, and buy.
Any questions in the
here.
chats, go ahead and ask me and I can explain.
And this is what we'll come on to through the course.
This is pretty basics anyways.
So when we're trading with the trend, to confirm we're trading in the trend, we need to see price cycling well, as it is here, creating higher highs and higher lows.
So now this is the downtrend.
In a downtrend, we look for the
Same
opposite
steps.
pattern, which is a pattern of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So we're looking for the key turning points here, which are here, here. And as you can see, each one of my high points is getting lower, and each one of my low points is getting lower. So we can identify a chart pattern of lower highs and lower lows. As I said, guys, the market will never drop in a complete straight line. It breathes, it cycles. So we want to look for these areas to sell at,
And if
as these
does
are
ever
typically the
drop
high
straight line,
probability areas to sell.
only for a few
Yes,
minutes,
we can make
pretty
money
much,
buying, but this is simply like
and then it's
swimming
gonna go
against the tide.
straight back
They're
into a
low
trend.
probability setups. You're fighting against the direction of the overall trend. So remember, we use the daily chart to find direction, and then the smaller time frames to find these more frequent cycles so that we can sell at the high points. Or if we're buying, we buy the dip. Come dip, buy the dip, buy the dip, and so on.
Exactly, that was our price expressions page that we've just done now. Then we got support and resistance like I was going through earlier, as I can show you with the gold. Still going back down. So if we were to take gold as an example, actually, go into our daily charts, or even 4 hours pretty much. Oh, that is so messy looking at it that way, but yeah. So, daily wise, pretty much. Have I got the thing to draw this trend line? There we go. So it's going up. And then it's going down from there. Up again. Down. Up. Down. So up to here, it was a downtrend. If you look for example wise, from May, it was a downtrend until the start of October, which is what we are in now. And now it's had a mad shift in direction where it's gone into an uptrend right here, but the trend's not been confirmed because this is again monthly daily charts, right? So we did look at overall months. So if we put this into a 4-hour time frame, we can kind of get a chart into this. So there, going down, and then from down it's going up again. Then it's still again another downshift there. Then from going down, it's gone all the way up here, down, up. But this is kind of really up. You could just do a smaller one here, but so if we do a smaller one, down, and then up, pretty much right here. So this is the situation we're in. Again, higher highs here, then higher highs here. And this is the other higher high. So if we were to go, it's probably going to go down here, then up here. That's only if it continues to be in an uptrend, is what we're talking about. But as I said, we're going to wait to see how the market is going to react. Because right now, you know what? Start of the new month, it could just go back into a downtrend and follow the pretty much downtrend it has been following for the months. It might just be one odd month. If you were to look at the overall trend of the year, it might just go straight down and, you know, follow the downtrend. But I highly doubt that. And even if that is to take effect, it's not going to take effect immediately. Here we are. So we go back into our hour time frame. So look at this. What did we say? It acted as a resistance there. If you did, you know, buy in at that point, pretty much, you would have had about 15-20 pips, 60 pips right now so far, if you did buy at the last spot. As I said, we did act as an resistance. But yeah, This is moving on to the support and resistance now. Oh, I'm hella tired right now, man.
Support and resistance. It's essential to identify and highlight support and resistance lines on your chart. We have a few rules in place that we use when trading support resistance. Like the majority of trading, it is very subjective. You'll come across traders that have key levels absolutely everywhere across their chart. You'll come across other traders that will just look for extremes, which we called hard levels of support and resistance. They're not always used to find trades from. We can also look to target key levels. I like to think of levels as a potential magnet where the guys who are moving and driving the market could be attracted to certain prices, certain levels, to hold price to work on the fundamental side of trading. This is where you can often see levels in and around whole numbers, i.e. 1.2000, 12300 for any yen pairs and so on. So we do look for 3 or more touches to confirm a strong level of resistance. Ideally, we draw all levels on a daily time frame. Of course, the longer the time, the stronger the level really is. When we go back onto our daily charts, if it is a strong level, it will respect throughout all time frames. Of course, if you're now scrolling back and you see price rejecting the same period 5, 6, 10 years ago, it just confirms that this level is extremely strong and price is attracted to it years down the line. The higher the time frame, the stronger the level, as mentioned. I personally draw everything on a daily chart, but of course, if you come back to a weekly or even a monthly level, in fact, Euro Aussie actually rejected a key monthly level recently. The more bounces than breaks, the stronger the level. Of course, just like the rest of trading, it's a game of probabilities. If price is failing to break through a level of support, so it keeps stamping its feet on the floor 9 times, the 10th time when we approach that same level, we would expect a bounce. It's a game of probabilities. Of course, and as we will discuss very, very shortly, price can move both sides, so it can actually break the level and retest it, or continue using it as a support or resistance level. As mentioned also, it often occurs at whole numbers. Again, this is more from a fundamental, perhaps psychological factor that when price is approaching a whole number, it may hold. If you look at the dollar index and also gold, you'll see a lot of whole numbers respected. It's rare that a level of support will be exact. We are looking for the most number of clean touches and the best fit. So this kind of comes down to that there's no real rule around drawing your support or resistance levels. It's simply the line of best fit. The more touches, the better. You'll see some traders actually mark out a key level in a zone. They'll have a highlighted area, maybe a range of 10 pips either side. And once price enters their resistance or support zone, they'll think about their next move. Do I take my profit? Am I now looking to enter a trade?
This is what I was talking about, guys.
So there's no rule around how you draw it. It's line of best fit. The more touches, the better. And the longer the trend line or the support resistance goes back, the stronger it really is. So support is the floor. So we're looking for as many
Right. Let's quickly check this out. Still going up. The resistance level is.
Touches on the floor as possible. So it's stamping its feet is what we like to call it. Now, how many touches do we look for, guys? We look for 3. Now, that's not 3 individual bars. It's 3 areas where price has gone away, come back to respect it. Gone away, come
This
back
is
to
what I was
respect
talking about
it.
earlier, guys.
So, of course, if we are selling, as an example, our target is not going to be below our level of support because it's unrealistic price is going to get there. But if we're looking at buying, then of course we would be looking to buy off a level of support, especially if I'm sitting here, as if we're playing the probability game. Twice previously we rejected our floor, so the third time we expect the market to go.
Obviously, this isn't 100%
Now,
certain
just
always,
something
by
to
the
bear
way.
in mind, guys. What
Anything can
happens
happen.
when something becomes cheap? People begin to buy. What happens to the price when people begin to buy? It goes up. So as you can see, price getting cheaper. So here we're selling. And again, as I said, guys, we would not have